I also understand that in the industry there are quite a few players also, right? Which is in your space.
Yes.
How do you all differentiate yourselves between the rest of the companies?
Okay, so a few differences. So one is, in addition, what I understand from most players is they buy endowment policies only. Whereas for us, in addition to endowment policies, we also buy some whole life, some universal life, and some 101% investment linked policies. Yeah.
Why is that so? How come other companies only buy endowment?
Okay. Well, because in our company, right, we try to keep our overheads low, so that we can pass on the savings to the policy holders and the investors. Yeah. So because for whole life, universal life, and some investment linked policies, because as players, to the player's standpoint, the profit margin of those policies is lower as compared to endowment policies. Yeah. So if your overheads
Are much
is
higher.
high, you may not be able to afford buying over those policies and earn the margin out of it. Yeah. So that's also one that we are different. Thirdly, we first understand the policyholders situation. We first ask for reasons why they want to sell to us. Yeah. So we will not take in reasons like, oh, my friends pressure me to sell the policies or give up policy.
Do you have that? Do you have people saying that to you?
I don't
Come
remember.
across?
God, yeah, but if
Okay.
it's that kind of reason, we definitely will not accept.
Okay.
For me personally, there are a few users from Sidley that actually messaged me. So I actually did a calculation, basically a table, and give them a very simple summary saying that if you give up this policy, what is the investment or the investment return that you need to get to be more than the maturity value, so that at least they get a very informed and educated decision.
Okay.
So certain policies can be up to 12 or even 15%. So
Depends on where they have been through lah.
yes,
How much?
correct,
Yeah.
correct. So in that kind of situation, unless you are really deep in debts, your credit card bills cannot pay, your
Oh my God.
mortgage going to your house going to for sale, that
Yeah.
kind, then that one, okay, you don't have to talk more. We will accept, we will help you as much as possible.
Yeah.
But if the reason is, my friend asked me to sell, I sell lor, then we are not making an informed decision, right? The most common one is buy term, invest the rest.
Yeah.
But at that point of time, if you already committed to the policy for at least like 15 or 20 years and you only left like another 5 years,
Then there's no point lah.
there's no point because the opportunity cost is too high already, really.
Yeah. That's true. Yeah. So, now that you all are at this stage, what is the next step? How do you all want to grow from here? Like, where do you all see yourselves?
A lot of
Yeah,
directions.
we have. Wow, we
No,
have many
really?
direction. Okay, so our usual direction, which is the normal, which is to meet as many financial advisors as possible. We are talking about, I remember correctly, 20,000 financial advisors in Singapore. So there are still many to meet. So the more we meet, the more network of financial advisors monitoring their clients' premium paying progress, and then hopefully you may get more leads of buying over policies in the event the client is unable to continue
Correct.
servicing.
Yeah.
So other than financial advisors, we also meet some of the insurtech. Okay, so for the benefit of those who don't know what insurtech is just a short form of technology companies that build technology products for insurance companies. Yeah.
Okay.
Yeah. So we are now in existing talks with some of the insurtech, and one of them is offering to build a broker dashboard for us to log in and be able to see which are the policies that the clients wanted to give up.
Oh.
So that we have options to buy over.
Oh, that'd be very convenient.
But I was thinking, because they need some inputs from us in determining the software design.
Correct.
Yeah. So me being having experience in software,
You're the best person
right?
to
So I will write software design description of the dashboard, the software system that we feel that is required in order to be able to integrate or collaborate with that insurtech. Yeah. The software design description also allows us to have been on the same page as the insurtech. Yeah, a common understanding, so that it's easier for us to move on and be able to collaborate. Yeah. So insurtech is one. So any other insurtech who we can collaborate with, we may be required to write more software design descriptions, for slightly different purpose. So that's insurtech part.
But that's okay, that's what you're good at, so you understand.
I mean, having the experience as software engineer. Because having involved in because a full software development lifecycle is not just development. It also involves design and tests and deployment, things like that. So the experience does matter. So other than insurtech, you also meet some of the banks. So what happens is we are in talks with some of the banks to see if they can offer loans to accredited investors, so that accredited investors can leverage on the loans to buy more of these insurance policies.
What is accredited investors?
Accredited investors are investors who earns a certain high amount of salary per annum. If I remember correctly, it's $250,000 per annum.
Okay.
So these accredited investors, what I understand from some of my banker friends out there is some of the accredited investors, when it comes to investing, right, if possible, they would prefer to leverage investment instruments. So meaning to say, like, instead of using $100,000 to buy over insurance policies, they try to borrow, up to 80 or 90% of the amount from banks.
Yes.
And then use that loan to buy the insurance policies on leverage.
Because they can get a lesser interest rate from the loan because of their status, basically.
And because this is considered low risk instrument product, so it's likely that when banks offer the loans interest rate is also low.
Yes.
And of course, insurance policies, they are MAS approved products.
Yes.
And protected by Policyholders Protection Scheme.
Okay.
And what's more, insurance policies have a guaranteed component.
Yes.
So even though because there's a guaranteed and non-guaranteed component, so when even in a situation whereby the non-guaranteed component, the bonus get cut, right, the guaranteed component is still there. So the banks can actually
is it just based on the guaranteed portion they can get back their money already?
Correct.
So as long as the guaranteed portion is more than the loan interest rate, then it's so-called safer investment.
It's the same. So
minimum the same. So they don't make loss from the loan.
Right.
Yes. And this is, I guess, a way for these accredited investors to have a portion of their portfolio as a low-risk investment. Right?
Yes.
Is it?
Yes.
Yes.
For that,
it's considered low risk.
So
for
assuming
them,
they have a diversified portfolio, different investment instruments. This trader insurance policies is considered one of the lower risk instrument. Actually, there's a guaranteed component and they are MS approved products. They are backed by policyholders protection scheme.
And as the years goes by, the non-guaranteed will add on to the guaranteed.
Yes.
So it's like you have now, for example, today, then guaranteed, non-guaranteed becomes guaranteed of the year, non-guaranteed becomes guaranteed of the year, non-guaranteed becomes every year. So you slowly build up. So to the banks, they don't see a way to lose money also, I think. Except if, let's say, the insurer fail, but
not likely lah. It's not a very likely situation.
It's not a very likely situation because of the reserve ratio, which is the money that they really put aside just to service all the policies. That in the event that they need to pay out, they really have a big pool of money already. So if that fails, that means the whole economy fails already.
That's very interesting actually. I never thought of it that way. I never thought of the accredited investors part. It was actually something that I wanted to ask just now, like who will buy, who will be the buyer for all these policies?
Normally we sell those insurance policies to accredited investors, family officers, fund managers, and probably to financial advisors
because they understand it.
Because they themselves know the products.
Because the trading is not really regulated for now. Because the policies are MAS regulated, but the broker, the trading is not. Because there is a bit of risk. You still need to think about, let's say, if the person needs to claim, what should you do? Like normal people, we don't know the person. How can we find how to claim? We need a death cert. We need to search the death registry, everything. So
there'll be a lot
of hassle.
Complicated lah.
So that is a risk. It's a small one, but it's still a risk. Although the returns is really a lot lah. Bonus is bonus. Right? So it's easier to deal with people who really understand. So they can see why it's a very low risk product. But to many others who don't understand, they'll see it as a very high risk because it's unregulated.
So in terms of, let's say, fund managers can buy it under their company's name?
Hedge funds normally.
Hedge funds. So what I believe what they'll do is they will buy over those policies and then put those policies as one of the underlying assets in a hedge fund
portfolio.
Yes, because those policies, they kind of functions as a low risk investment instrument. In a diversified hedge fund. So
but the policy will be named by the company, not individual, right? Become a company owned.
The fund management company name.
That's interesting. So other than these outlets, what do you all want to expand into?
Other than, sorry, I beg your pardon?
Other than this, you mentioned I think 3 of these things that you want to expand into. What else are you all looking into?
Other expansion.
To grow into.
We are also looking for joint ventures if there are people who's interested. Like sort of like a semi. Okay, in the United Kingdom, it's so matured that there are funds, unit trusts that the underlying is all these insurance policies.
So just all policies.
It's just all pure policies.
Multiple policies may have different maturity dates also.
So if you can build like a bond, like a bond with different maturity dates. A policy with different maturity dates. Very interesting,
Wow, I don't know how you're going to calculate all these things. The calculation must be insane.
That's a fund manager's job.
That's a fund manager's job. So they have to
be good in numbers. So they should be okay with doing that.
The calculation must be insane to do this thing.
I guess it's possible. So
but the underlying for all this traded insurance, right? Because it's low risk, so normally the returns will be about 5% and below. And if it's very near to maturity, probably about 3.8 or 3.6% for 2 or 3 years. So it's alternative, but they are hard to come by. I can only say this. They're hard to come by because honestly nobody want to surrender their policies.
For now lah, but who knows, maybe things might change in future, environment might change. Yeah.
So we see it as a support system to the whole finance industry. Because we want to, like we say, policy work means policy asleep becomes awake.
Nice.